Hello everyone, welcome to this next edition of Market Rubaru. Today I have with me a person who has an experience of 35 years in the market. He has been in the market maybe, if I hazard a guess, a lot of maybe half the viewers are younger than his experience in the market. And as a full-time trader, also he has an experience of 17 years. And that is a huge experience in this kind of market, and where he has seen all sorts of cycles, all sorts of news and everything. And today, what we are going to talk about is a very unique study, which, though it is based on open interest, a lot of people talk about open interest, but he has a very different way of identifying what is happening below the surface. In fact, I also use open interest very widely in options, which a lot of people have already seen on Twitter and other places. But he uses it on futures. And though people say that open interest doesn't work, he will show a way where you can really shortlist stocks which are about to make a big move, maybe bullish or bearish, whichever, and how to identify them and how to trade them. So welcome, Dinesh. How are you?
I'm good, AP. How are you? Welcome. Thank you for having me over.
Yeah. So you can start now.
Yeah. So futures open interest is because we normally today everyone is an option trader. In options, we talk about the change of OI in puts and calls. In futures, it's different. It is the open interest of the active positions of shorts and longs in the system of stocks and indexes. So from a perspective of a newcomer or who's not done futures or wants to learn, a future build-up is something like this, which is there in your OPSTRA page also. When a price goes up and the open interest is also going up, we call it fresh longs being added in the system. That is, more people, more investors and traders are chasing that stock further up. When price is going down, open interest price going up, open interest going down. It's short covering. That is a reversal happening after a correction, or say a sideways movement happened. A few people were short in the market, and then we had a opening which went green and started pulling up. It could be due to a news or could be just a normal movement happening. That's called short covering taking place. Mind you, there's a difference between fresh long addition and short covering. In the case of a short covering, the shorts are running away from the system. No new long is added. It's just a replacement of the third happening, and in a fresh up, new longs are being built according, anticipating more further rise in the move. In a price down and open interest up, it's the vice versa of a fresh long, where new shorts are being built into the system, while in both going down is long unwinding. That is, now the market is overbought, exhausted. Now the targets are achieved, and smart money is our general is being seen as exiting, booking profit from the market at that current moment onwards.
Yeah, so viewers might recognize this. This is a typical standard futures metrics, which is sort of people learned in the KG of futures trading, and that is a very standard thing. But then this is something which is the base for what he's going to talk about now and how to analyze OI further.
Yeah, correct. So this is minimum understanding. This is what the screen throws to you, because see, the screen is basically looking at all data. It does not understand a combination of other things, so it just throws you this. So the instant first interpretation is this only. So now sticking to this only in your OPSTRA page only, when you click on the future build up and you go here, 1 day change, you will notice one thing on a day-to-day basis, whether you are looking at fresh long, fresh short, short covering, long unwinding, you might see it. Rarely will you see a nifty stock making it in the top 10. Very rarely. It will mostly be out of the next nifty or the balance 108, 80, 90 stocks of the CNX 200, which are in the derivative, which will always be there in the top 10 stock changes happening, whether in every day in and out. The reason behind that is that in the large caps, you have a lot of institution trading happening, and institutions do not come in and out of a trade very fast. They take their own sweet time of turn happening. So the OI change also, because the market wide, the market cap and the size of the stock is quite high. So the percentage change will not reflect in the top 10. So when you are as a trader looking for stocks which are having a long build up or a short build up or covering and all that, you need to have a different barometer for Nifty stocks and for the rest of the stocks. So in this example only, and this was yesterday itself. Okay.
By yesterday, you mean Tuesday, 16th May, because we are recording it on 17th May.
Correct.
Yeah. Okay.
So this data showed that iShares just makes it in the top 10, 15 stocks among the Nifty for the change, while you'll only see the rest of the CNX 200, CNX 100 stocks which are there. So yeah, as a FNO trader looking for a future build-up, you need to further prune yourself down, look at in the Nifty stocks. So in Nifty stocks, the usual heavy duty change will be around 3 to 4%. If you see a Nifty stock which is doing more than a 4%, 5% move, that means something big is being built up out there. Okay, so then we go back and we reflect on that part of the chart.
Okay.
Now, when interpreting futures open data, now in OPSTRA we have this beautiful column which is 5-day change. Okay, earlier, this is the left of my screen, 5-day change. Earlier, what used to happen is that for traders like me who are looking for a stock where the futures open interest is reflecting a big move or a small move, etc., we had to download the Bhav copy from NSE. After that, set it up in an Excel file, and accumulate against a symbol what is happening in the last 5 days accordingly. Just by blindly going by today's change is a recipe for disaster. Now, why do I say recipe for disaster? I'll be coming to that part soon. The first part is, mostly what happens is that a trader tries to look at this top stocks, that which is natural. Even when you look for a Google search or anything for something, our first mindset is to click on the first search engine which comes. So similarly, when we are looking at the top OI change, our first habit would be to click on the stock which has got the highest OI change happening at the current moment. But my way of doing it is slightly different. I don't want to see a stock. For me, the idea is that the OI change which is happening, firstly, I don't want to go by the daily change. For me, it is, I want to see what is happening on a 5-day basis. 5-day, because 1-day change is literally narrowing your horizon in a stock. It could be something which is already discounted, in the sense that it's a pump and dump scenario happening at that moment. The bulk of the thing has been done through a consolidation which took place over the last 5 days. So my advice is, when you are looking at the OI data, your first thing should be not to look at the 1-day data change, but rather what is happening over the last 5 days. How did the buildup happen? How is it changing now? According to that, look for a stock change which is going to take place. That's the first part of it. So I'll just continue with that and explain to you. So now, please remember this. Just looking at the open interest future build up and taking a trade blindly, that it's a fresh long based on even 5 days or 1 day or a fresh short, is not the correct way to trade. Your knowledge of charts is more important. What the data is doing to you, it is doing an homework for you in identifying trades in advance and anticipation of a bigger move.
Yeah, this is something which I also talk about always from options. Whenever people talk about change in open interest, what I always insist is, you are looking at the open interest just as a hint. You are not going to trade the open interest, you are going to trade the price. So finally, price is the key and not the open interest.
Correct. So that's what I'm coming to. So when you are going to look at the open interest, it's not necessarily an immediate short long, which many traders make this mistake. Supposing they see today stock is up 5%, OI is up 30%, they feel smart money has entered, let me also enter this stock and trade it. That's not the way to do it, because you are only looking at that 5% move and 30% up OI, and you are going to make a lot of money because more people entered. What you are not realizing, number one, is that over the last 5 days, what has happened? Maybe those people are now exiting who have bought it at say not just today's 5%, they must have bought it when the price was declining 2-3% in the last 5 days. They could have been building it up nicely at that time, and they're just dumping it to you now because you entered. First part. Second part, even if you get it right in a stock which is moved say 5%, hypothetically speaking, what is your risk now in that trade? It's a massive 3-4% in a FA futures trade. And even if you're doing options, forget the future aspect. Most traders today are into option trading. You are going to enter into a stock which is already spiked, and even a 1 day, 2 day pullback in that stock, 1 or 2 days, will see a massive meltdown of your option, which will again lead to a loss to you. Again, you will have to do adjustment. So please look at 5 days and reflect it on the chart screen. Your knowledge of the chart will then help you in this. So it's more like a complement to your main knowledge to go to.
Right.
Okay. So why do I say this in a 5-day concept? I'll just explain to you. I've just drawn, and I have gone through this. So today a lot of back tests are done. I am telling you of a bottom test which has happened. So over 17 years of trading through futures and options, I realized that just blindly going through this was an absolute bottom hit test. You were getting hit on the bottom, and let's just explain to you how the OI of a future is deceiving to a certain extent if you only look at it from a 1-day perspective. So here is a scenario in front of you, a stock which has fallen down. Okay, this is the first hint which comes to you, that the stock price is down, OI is up. So the first hint, the OI is up marginally. That means the previous traders who are shorting this market are not adding to the shorts right now. They must be slowly exiting, but the new traders are now jumping into that set. Typical pump and dump happening out here. And that's the first thing. Do not get into a stock where you see, say, a price is falling by 3% and the OI is also at around 5-6% in that stock today. I'm talking about out of the Nifty stocks. In a Nifty stock, if the OI is only 1%, that means it does not have fresh participation in the fall. So don't get into that. Try to sit it out. What we see subsequently is a turnaround, price goes up, OI going down. So those who shorted here are in a trap, plus those who had shorted were trailing are now out of that trade out here. So the shorts are getting out of the system. A few longs have gotten, a few, not too much, and there are some who are trapped out here. Then we see a pullback happening, which is very typical. After a breakout, we tend to see a pullback happening, a consolidation. Any chart study you do, whichever study you do, will show you that aspect. Here is where the major trap occurs. Either you will see those who, what you call entered out here are quickly exiting, those BTST traders and 1-day kind of traders. So what they are doing is they are doing a long unwinding, price is dipping down, and there are others in the system who look at it as an opportunity to go short, that, oh, this fall, this is the pullback which has happened, now again short is happening. But here is that catch, you are again seeing a difference happening in the OI and price. Okay, so that's your second hint. It's a bear trap out here. And what leads from there is, they've done sufficient trapping. First trapping happens at A, second trapping happens at C. The bigger one happens out here because most traders either are what you call doing an average short, fresh short, or those who are trapped on top out here in long are exiting that, let me book my loss and run away. And here comes the sharp move. The sharp move is where most retail trends to get into it, because they look at that 1-day figure, 30% jump in OI, 5-7% jump in stock. This stock is going to do much better now. Intraday perspective, yes, it can do very well. But from a trader who wants to do a positional trade or even a swing trader, It's not the way to enter the stock. Now here what happens is from D to E again. Again we see that after a huge candle or a spike, we see some tiredness, some consolidation happening. Again we see traders trying to some panic exit, but the smart money is still sitting quietly out there, still sitting. Then we have that spike. Now in the last spike, what appears to be short covering is not short covering. It is those smart money who had the entered out here at from C to D and are holding on to that stake are now exiting in that stake. But it's they are exiting. So OI going down, price going up, one day will look like short covering, but when you look at the bigger picture, you will realize it's long unwinding happening out there. Smart money is quietly taking it out, and then we have the turn which takes place from there and there happening out there. So here is a typical scene of what probably happened on the 15th of May. Okay, 15th of May, you can see Lalpath Labs. 5 days the price is up, OI is up 12%. Okay, on 15 there is a 1% drop with a 6% jump in OI. If you are looking at a trader who's new to future and open interest or who's ignorant of the other windows, you will straight away think it's a fresh short setup and you will jump without looking at what this is telling you. This is the beauty. This is what you need to look at. Okay, continuously your one eye should be there. So now let's go and see what happened in the chart. So if you will go and see what happens in the past data also, if you trick it out, this was the consolidation happening out here of smart money buying. This is the spike on the result day, and after that this drop that you are seeing, this could be those people who entered on the 12th, which was Friday, and are now panicking and exiting out here. So it's not a major exit signal to what again we go back to our charts to look for a signal. Should I take a short in this stock? No, because the chart is not giving me a short signal after such a huge green candle. It's rather saying get into it on the pullback at the support, right? So that's very important to understand the difference between looking at the OI data in that aspect. Okay, now another one is of the 16th May. Again, you can do this during market hours. You can do this post whenever you want to do it. Look, I do it during market hours to get a good understanding of how the market is moving like this. Now, this is RECL. Again, if you look at it on a isolation basis, 10% is a decent OI buildup. Okay, price is down. This looks like a short buildup. So to convince myself whether it is a short buildup or not, I need to see what happened in the last 5 days. So the 5 days shows a flat market with 11% buildup of OI. Okay, so some kind of this consolidation, whether it was accumulation or whether it was distribution, needs to be checked now. Okay, so here we are. I open the chart. Otherwise, I may not have gone to the RECL chart, and I see a bearish ABCD formation in harmonics out there, and I can see out here doji candles formation. So in this zone, there was no what you call push up happening. And if I try to go back to 10-day data, 15-day data, I would have realized that long unwinding took place then only, and then slowly that 10% of OI buildup that you see out here is a fresh shot like this, very quietly and stealthily done without any noise. And that is what you want to trade in this market. You don't want a combo thali from a food app where you get one dal, one small portion of rice with papar, roti, and one spoon of pickle. You want the chappan bhog. So if you want to do that, you need to look at the bigger picture, go through the OI changes which are happening, spot it, set up your alerts above this, below this, your study, whatever it tells, I am into the trade. You don't have to find out one every day. You need to find 1, 2 a week, and they do the job for you in the entire settlement. You can come, enjoy the trade, and leave out. You can do an option setup, you can do a future setup, you can do a hedge setup, everything possible. It's not necessary that I'll only trade through futures. I can do it through any instrument possible. So the other part is, which is a beautiful part which I like of the OPSTRA, is the future build-up advanced decline. Very few people click on this icon. So I want to highlight that is just like we have the market breadth advanced decline ratio, one should also look at this in the derivative data. Just by assuming market has become too strong, too hot, it will fall down, or it is what you call too heavily sold, it will rise more. No. Look at how the OI buildup is happening out here. Look at the breakup in front of you on how changes are happening in 5 days. Is there any long unwinding happening? Very nominal long unwinding was happening. Short buildup is there. Okay. Short covering is also there. So you need to see how this data is changing out here. How is it changing? Because smart money will always do it quietly. They don't do it with a bang. They will always find a stock. They will accumulate or they will distribute first in a decent quantity, and then comes the big bang. So learn to catch the big bang like that on the screen. Yeah.
Yeah, just to put it lightly, smart money will not tweet what they are doing.
Exactly. Exactly. They'll first set up their positions and do it. So again, coming to today's 17th of May, the scenario, what is the topmost stock on the, if I do the daily change, I'm done the 5-day change. Okay. 5-day change, look at the OI in change in LIC housing. 0.7% 65% OI change. Now this is massive. No price and movement, 65%. And today there was a 17th May massive dump happening out here. Okay, massive dump today. But before that, I want to go to the LIC chart and explain to you. This had come in the screener yesterday itself. It's not something which came today in the screener. It came on my screen on 16th May itself. So yesterday was a massive green candle in LIC housing. Massive green candle. Okay, very tempting to add this stock out here. Looks very bullish. So again, you need to see bigger pictures on how it is happening. Question is, why was it flat and all that? So I spotted that the Ichimoku monthly, we have just got 2 weeks to go for the month ending coming, is coming to a block at 390. I go to the weekly, I have a same scenario, a block out here coming at 390. Same price, same block, 390. Then I set up this. So I said, okay, if it has to go up, yesterday I will set it up. If I see it sustain for at least 1 or 2 days before above 390, or if it falls below this level, 387, I'm going to take a short in it. Then, as I did a further close scrutiny, I spotted a bearish ABCD formation, a harmonic bearish ABCD setup at yesterday's high. So one more reason for me to be convinced that there was a quiet distribution happening. Now you can call it hindsight basis, you can call it whatever, but when your study also gives you a signal which is getting complemented by the scanner, why not jump for it? And here in the weekly also, we have a bearish RSI divergence. Okay, so one thing to the other thing to the other thing leads up for you. Out of 190 stocks, to go through each and every one, try to find the perfect setup to enter a trade. What are the probabilities? Very low. Well, you might get exhausted going through 190 stocks. Let the data do that job for you out there. So again, similarly, there were 2 more stocks which I spotted out here. So one caveat out here, that during the result season, that is in a quarter for 5 to 10 days, this OI buildup which happens quietly can also be due to anticipation of a result and all that. So you can skip these 10 days of the month if you wish to, and look at the rest of the days per quarter, which is 50 days of the 60 days in a quarter of trading we have, and focus on during that point on how the money is entering a stock, how they are trading on that stock like that. So today there was another one which was Jubilant Food. Okay, again Jubilant Food today was a result reaction to it, but look at this, look at the build up. So you enter today, you are into a big trade like that, but if you look at this, this was a signal giveaway out here. Quietly price going up with a massive OI buildup out here. Yeah, quietly. So now at a week, what you call at a weekly minor resistance, the stock is. So if I were to take a fresh trade in it, I will either wait for a pullback now, or I will wait for this to be taken out. Then I will convincingly enter the trade.
This was the case even when today market was down, still the stock was up. So something was cooking in it.
Yeah, so result trigger. Na? So that's why I said, na, you may avoid this study during the result season on particular stocks. Like if the result is due, you're seeing a build up, you don't want that uncertainty play, leave it out of the picture, But in all circumstances, just looking at data doesn't help. We set it up purely on our chart knowledge, whichever study you do. It doesn't have to be particular one study, whichever study you like. So the other one, which again came on my screen, was Chambal. Now look at this buildup. Don't go by today's data. Look at this buildup.
This setup is quite explosive. It seems very small change in the price, but a big change in the OI on 5 days.
Yes, correct. You hit the bullseye. Always look for that part of the thing, So if I do this, okay. So my whole idea is this, that I don't look at blindly this change. For me, the idea is that even on a daily, even if I want to see on the daily, my idea is to look at how small was the price change, how big is the OI change. If I see something, say, okay, let's do it on this side of the page. Okay. So if I see something like a 5%, 31%, I am not interested, because that's natural. It's a CNX 200 stock. It's not a Nifty stock. It sees a lot of movements happening, a lot of retail participation happens. I won't touch it. Now, similarly, if I see Dixon, okay, see Dixon, 20%, 1%. Out here, 2%, 33. So this is something which will interest me, that yes, now I can go and check the stock. If I like the setup, I will set my alert or I will enter the stock. So the preference should be lower price movement, higher OI change. That's what you want to spot as a winner in the whole trade. Whether in shorts, whether in long, do not go blindly by the one-day change happening. Look at a bigger picture and then trade, because that's the way you can get a 5-7% move in a stock. You can set up through an option hedge. You can go buy a simple buy of an option on a trigger. Set up the trigger above this, or I will buy this call or this put, and just let the trade. Yeah, you can see Jubilant also, this one. Then there was yeah. See now, Oberoi Reality had a massive crash today. That's a result thing. But the OI was not convincing enough to come in my alert. Why? Because at 2.8% for a stock which is a part of the CNX 200, just a 7% OI change is not convincing to me to plunge into the trade. But at the same time, look at Tech Mahindra. For a Nifty stock to do a 10% move in a day with a flattish OI, if a flattish price, 10% OI is a huge thing. It means huge for a Nifty stock. Plus, in 5 days, we are seeing a 13% change again on a flat price. So, for Tech Mahindra, set up your alerts and according to that, enter the trade. Don't have to blindly enter into a trade just because it is there. And keep your alert ready that if the price gives me a direction, I will go. So, be completely neutral in your attitude. Do not have a bias towards long or short. Set up alerts up, down. If the trigger hits, go with the kill out there, because that's what will make you the bigger money in the end. Yeah.
So the bottom line is from the OI, you can only find out that something big is happening. What big, how much big, in which direction, let the chart tell you.
Yeah, absolutely. Because it's not possible, like I said, to go through so many charts and pick up this move, pick up that move. And because frankly speaking, the derivative trades that we do, 90% of the people is for a couple of days. Okay, most derivative traders, especially in futures options, if it's running in your favor or something like that, you run off your trade in 3 to 5 days, max to max, or you carry a little quantity if you have done a huge quantity entry like that. So when you want to do something, the bigger idea is to run it long. You want a bigger pie. Every day you don't get a opportunity. Markets move, stocks move every day. Some stock or the other is running 4%, 5%. But what is the probability that you will catch all of them? very, very low. No? So this probability helps me in getting into that aspect of derivative trading on how to catch that.
So here you see how the open interest is rising massively, and this is
Yeah.
just a graphical picture of the same table which you had shown earlier. Nothing different, but
Yeah,
some
yeah,
people like
yeah.
the graphical picture, so this is what it shows.
Correct, correct. You know, so it's how you, because I'm used to that thing, but if you have a graphic in analyzing for you, it's much more easier to pick to the eye. Like
Right.
you might make a mistake with numbers here and there, and what's the guarantee you'll remember what was 3 days, 4 days, 5 days ago, right? So
Yeah.
this is so clear and neat to you. You know exactly how it was moving all these days, and you just get a confirmation and you leap onto that trade accordingly. Set it up, set up your alerts, and just jump into a trade and make maximum profit out of that trade. And do it through whichever instrument. It does not have to be futures. It could be any instrument. Take advantage of it. Okay.
Yeah, thank you, Dinesh. This was a brilliant way to shortlist out of all the 200 odd stocks in FNO, how to shortlist a very few number of stocks for the next few days. Like you rightly showed in OPSTRA, you can scan them and shortlist them to only 5 or 6 stocks. And then once you have some trigger on the price, you can trade them. And as you rightly said, there is no need to trade every day. Even one trade a week is good enough for a positional trader. This is not intraday at all. So of course,
Yep.
you might get good intraday trades as well. And as you all know, we have OPSTRA in Definedge securities also now. So this is much cheaper if you open a Demat account with Definedge securities. Instead of the earlier 1300 rupees, it's only 800 rupees per month in opstra.definedgesecurities.com. So you can have all the features here. And of course, you can take a 1 month free trial of the OPSTRA Pro also. So thank you, Dinesh, and I hope you all enjoyed this video. Do subscribe to this channel, like it, and share it. Thank you.
Thank you, Epi. Thank you for having
Thank
me
you.
over. Bye bye.
Yeah, thank
Bye
you.
bye.